What's going on, guys? It's GBP baby. Welcome back to another video, another weekly review. I hope everybody's doing well, and let's get straight into things. So I'm going to be taking my time this video. It's Sunday, so yeah, defo get your snacks, sit back, relax, and let's see what we can find and see how we can approach this incoming week. So first of all, what we need to be looking at is the calendar for this week. So let me see what news we have this week. This week we have high impact news on Wednesday, Thursday, and Friday. So it's looking like a quite nice week. We've got CPI on Wednesday and then jobless claims on Thursday. So there should be quite a lot of volatility in general. But nonetheless, I am expecting a down close week. So I'm looking to see if price can trade on lower. And the reason for that is because of how price failed to get into this fair value gap last week on the back of non-farm payroll. So what I would first want to bring our attention to is going to be this inversion fair value gap that we have going on here. So between here is a fair value gap. Let's make it red. And then you can see if we drag that through, you can see our price is closed below it, came back up to it, and look how it's struggling to trade back through it. So this is acting as a weekly inversion fair value gap. And this is significant because we should anticipate this to continue to provide resistance to price, assuming we are going to trade lower. Because on the higher time frame, I do want to see lower prices, meaning that we should be looking for PD arrays such as these to draw our attention to, that we can expect rejection. Now again, you can see our price failed to get into this fair value gap pretty much at all. But what's interesting to see is that last week we did trade to the 50% level and then came off of it. So moving into next week, again, it'll be interesting to see if we can tap into there. But generally speaking, I want to see more downwards price action. And then also the fact we failed to get into that fair value gap. If we look at the gap that's created now, so here and here, we make this yellow. This can act not as a breakaway gap, but the fact that we're leaving this range open with a bearish bias, I ideally don't want to see price come back into there because it shouldn't need to do so. As in, last week, us trading into the fair value gap between this low and this high, so this, for me, was enough last week. As in, we don't need to go back in there again, is what I'm saying, if we are to be trading on lower. So we need to be keeping our eye on that and paying close attention to that moving into this week. So let's go down to the daily and see what we can find. And you can see how, you'll see how disgusting the daily actually is right now. Pure consolidation. Why? Back and forth price action. We're clearly range bound. And you can see obviously non-farm payroll, the damage it done. Now the fact that we traded so deeply into this bullish order block shows weakness on this behalf, meaning that this bullish order block isn't acting like one. Therefore we should pretty much, you know, what's the word, like not ignore, there's another word. Basically it's not valid anymore, because if it was a valid bullish order block, price would have respected the 50% level, and we completely violated that here. Therefore it's no longer valid, so we shouldn't treat it as a bullish order block, and instead we can use it as a draw on liquidity. So these lows, so let's get that marked out as south side liquidity. There'll be a lot of sell stops below there, and then again you can see how we tapped up into that inversion fair value gap respecting that 50% level, and we had displacement. So now what we can pay attention to is this bearish order block right here, coupled with this breaker. I'm going to mark out this just because it's at the top of the fair value gap. And I'm going to write daily bearish order block. And ideally this will be the very highest I want to see price trade this week if we are for us to create the high. So if we're expecting a down close week, this is the very highest I want to see price trade for me to remain with my bearish bias of wanting to see us trade down into the south side liquidity. Now don't get me wrong, price doesn't even need to get all the way up there. It could very well just trade just above, say, Friday's high and hit like 50% level of this fair value gap that we have right here. So let's get that delineated as well, just to make things a little bit more clear. So we have a gap between this low and this high. So this is an imbalance downside delivery. There hasn't been any upside delivery. So price may seek to try and fill this in early in the week to maybe create the high of the week and then come down towards relative equal lows we have going on down here. So let's get that marked out as daily fair value gap. And then, like I said, I'd like to think that we can see some kind of rallying into that and then find rejection at that level to help send us lower. Now look, take note of how we've moved from the higher time frame. So we've used the higher time frame up here, knowing that we're turning away at this point. And based off that, I'm looking in this range and below here for PD arrays that should also help us turn around, and that's why I'm identifying these. And as we keep dropping down to lower time frames, we continue to do this, and that's how we manage to gain and get accuracy. So you did know, if you're listening properly, I did mention a breaker. This last down close candle is a breaker. It'll be much more clear on a lower time frame, so I'm not going to draw that out right now. But generally speaking, what I have my eyes set on moving into this week is this daily fair value gap specifically, and then these relative equal lows down here specifically. So let's go to the 4 hour. And now the breaker is a little bit more clear. We have a swing high, low, high, high, and then clear displacement. So this low, which pretty much lines up with the low of this, is a breaker low. Now it's not the cleanest breaker, and I say that because there's not much volume there. But nonetheless, I'd like to think that price can rally up into these highs, and you'll see again there's a fair value gap now on a 4 hour within the daily fair value gap, also lined up with the daily bearish order block. So this is more confluence and more reason as to why I'm actively seeking for price to draw into this premium at the beginning of the week. Also, there'll be buy side liquidity will be resting above these highs. Why? Because people would have gone short there. People would have gone short here. But lots of people would have been short, right? Saw this move, threw them off, and now they're just confused. But remember, we have an overall bias. We want to see us run into this south side liquidity pool. It's just first, we need some kind of manipulation, and that's why we're allowing price to rally into these ranges above price. We will take a quick look at the 1 hour. Again, absolutely disgusting. This is why I don't trade non-farm payroll, guys, because why would you want to be involved with something that looks like that? But yeah, nonetheless, let's take a quick look at the 15-minute. And again, you can see now how these highs, this high, this high, this high, these highs, all these highs, this is what we call relative equal highs. And relative equal highs is where buy side liquidity resides. So again, more reason as to why we're expecting price to want to run that. This is too smooth, right? These highs are way too smooth. I want to see them get grabbed. And then after, I'd like to think that price can come down for these lows, because look, these are too smooth. Low, low, low. These are just too smooth. So price draws to these levels. It's just us. Our mission is to figure out, okay, where's it going to draw to first? And if we have that bearish bias, we should expect the highs to be ran first to accumulate what? Buy stops, buy side liquidity, and then we need to offset them at lower prices. So that's where my bullish bias is coming in, with wanting to see us trade up into this premium. Furthermore, we do actually have a breaker here. So we have a low, we have a high. I'm using the volume, so I'm looking at volume when I choose these highs, by the way. We have a low, we have a high, we have a lower low, and then price is delivered to the upside. So this up close candle here is a breaker, and you can see it acting as a breaker right here. Look at how prices came. Yes, it's overshot it a few times, but generally speaking, look at how we respected it and left it. So as far as I'm concerned, price shouldn't need to drop back below here now until we've taken out these stops. This should be enough, because look how we've passed through it multiple times. Once, twice, 3, 4, 5, 6, 7. This range has been traded through enough times that we're on the buy side of a curve, right? So if we were to drop through this, it'd be really confusing to me, because, well, we haven't got any buy side liquidity yet. So that's why I'm expecting us to run first before we do get down below that. Now, don't get me wrong, I could be completely wrong, guys, but this is how in depth I'm looking at things, and when I do these videos, this is the level of logic I'm using in terms of, okay, well, we've traded this range, we've had clear expansion to the upside, but we're bearish on a higher time frame, right? So we need to find what PD arrays we would use on a near term that can help turn us around, assuming this is all assuming we are going to run for these lows, but we've still got some time. Let's take a close. Let's go back to the 1 hour, take another look. What's interesting about this is we have a breaker here as well. So low, high, lower low, displacement. If we look at that last up close candle, which is right here, drag that through. See, this is where it gets difficult. Breaker, right? We came down into that breaker. Ignore the wicks. Wicks do the damage. Volume is what we're looking at. But look, we've came down into that breaker. So now price is expanding away. So again, it's respecting bullish PD arrays, right? This is a bullish breaker. Look how it's respected this. So where are we expecting it to draw to? Well, obviously these highs first. And like I said, it can get up here. I'm not going to talk too much on this right now, but right now my near term target is most definitely here. And then once it gets there, it's a matter of us waiting and seeing, because now thinking about it and just seeing how we're trading into this breaker, it's very well we could run for these relative equal highs up here, since that's the current trading range, right? Between this low and this high, that's the trading range. So it could easily get up there. It's just right now, the most near term and, low hanging fruit, as ICT likes to state, is this. So that's why I'm targeting that right now. And the thing is as well, even if price drops below this, so let's say Monday opens now and we're trading below here, we just move on, it's invalid and we'll know straight away. And that's why it's important to have these PD arrays marked out, so that when we do start disrespecting them, we can act accordingly. It's just obviously things like this, when you get crazy wicks and just not clean price action, this isn't clean. When you get stuff like that, it does make it difficult, and that's, I guess, that's the beauty of the game. So that's going to be everything on dollar. I hope that was insightful. Let's take a look at GBP USD. I am going to get rid of my markings from last week. So let's go to the weekly here as well. And obviously, if we're expecting dollar to potentially trade lower, that means we should be looking at pound to see if it can manage to trade any higher. Now, pound's been moving a bit crazy. Well, pound's always moving crazy, to be honest. I don't know what I'm talking about. So there's obviously this fair value gap, similar to dollar, how we've tapped into that. And then what I'm going to do is I'm going to split the fair value gap up, because the 25% level and 50% level are very sensitive, and price may use these. When we drop to the low time frames, we should be able to identify potential PD arrays that are resting at these levels that price may use in order to key off to then, trade on higher. Because remember, we're expecting some kind of low to be made if we're going to then trade on higher. There's not really much here, so to speak. We now have these relative equal highs though, this high and that high. There's going to be stops above there, so it's a nice buy side target right there. Let's make these a different shade of blue. This is a nice blue. Wow, never used this color before. And then we're going to drop down, and this is the 25% level. And then this is the 50% level. Cool. So now let's go down to the daily. And you can see, again, quite consolidated. This is a very bearish, candle, meaning that we can move into the next day again, expecting a continuation of that, because one, we're expecting bearish order blocks. How? Look. Well, no, we're not. Well, we traded through it, but volume still, nonetheless, traded up into the fair value, into the order block low, closing below yesterday's Thursday's candle. And remember, we're expecting some kind of fall before we turn around, just like on dollar, how we're expecting some kind of rally before we turn around. So this is all supportive of price. And then these lows right here look very juicy to me. So let's mark that out as sell side liquidity, because if it's going to go, when price moves, it's going to one of two places. It's either going to fill an imbalance or it's going to liquidity. This is sell side liquidity, and then we have an imbalance right here, which just happens to line up with our 25% level. So you see how things combine with each other as to why, as to how I can use that as a draw on liquidity. Let's go to the 4 hour. Displacement, clear displacement nonetheless. And then again, fair value gap is there on the 4 hour as well. So again, this is looking very high probability that price is going to be able to reach down into there. And this is all assuming that dollar does want to respect the PD arrays we have marked out and use that to trade on higher into its, premium PD arrays. So that's when I do trade, I do constantly flip between dollar and the pair on trading, just because it allows for more clarity. Now in terms of breaker here, high, low, high, high, technically this is the breaker on the 4 hour basis, but because of how much, resistance there is here, being able to identify these things becomes significantly more difficult. So we need to take that into account. I think the 1 hour time frame will probably offer us much more clarity and breadth. So let's go to 1 hour depth, sorry. And this is what I mean, a lot of back and forth price action. But nonetheless, lows, clear fair value gap, more lows below here. So it'd be nice to see if price can come in and fill that. And there's a little gap right there. That's going to be quite interesting. When I find gaps like this inside of fair value gaps, the small ones, that's sometimes when price gets very specific. I'm not saying it's going to go there, but sometimes you'll find that price will go right there to the pip and then just leave it. But yeah, like I said, this is good because we can see clear displacements. Like we can look at that and know it's probably going to continue lower. Where people get confused, or where it gets difficult for people, is when they don't know when it's going to stop or when it's going to turn around. That incites fear, and it just makes things more difficult. But we're different. Why? Because we know where price is drawing to. If it's going to continue lower, we know it's going to be going down towards the south side liquidity, and we know it's going to be trying to get into the fair value gap, which I've just drawn attention to. So once it gets there, all we have to do is either A, close out half our position if we think it's going to be dropping even lower, or just close the position completely and wait. It's that simple, isn't it? I make it sound simple. It's not. Trading and reading the charts are two different skills, guys. Nonetheless, look at this kind of resistance. Disgusting. So you can see our price is struggling to get down through it. But nonetheless, it has to be done, I guess. It is what it is. In terms of how it's going to deliver down there on this time frame and looking at it, there's really not much to go off, especially with Monday opening. However, I do know that Monday after non-farm payroll can run very quickly. Like Mondays after non-farm payroll, you might find that straight into, even the Asia session might start running, and then right into London we're just running. So we do need to be wary of that, but at least we have some idea of where we likely may be drawing to. And then after, like I said, once it gets down here, I wait, I reassess, and obviously I do my daily upload. So every day I'm watching price and tracking it, right? So once it does get down into the PD arrays I've called, I'm constantly tracking it to say, okay, if it's doing this, now where's it going to go? If it's gone to sell side, it's probably going to flip to buy side, you know, assuming we're bullish on the higher time frame, which we are. But we'll talk more on that later this week. But my point is, it's all just being able to understand where price is drawing to, guys. Let's finish up on Euro USD. This video is quite long. We are going to start on the weekly here as well. Excuse me. Yeah, what's interesting about Euro is that it never traded into its fair value gap. I did bring our attention to this last week. We haven't traded into that. Nonetheless, if we're expecting a down closed dollar, then we're looking for some kind of up close on Euro. Again, similarly to pound, in terms of draw, there's rejection block levels up here. Obviously these highs. And then in terms of discount, we've only got this fair value gap, which should technically act bullishly, assuming we're bullish. This is what we need to remember. We assume bullishness until proven otherwise. Nothing's proven us otherwise. Let's go to the daily. Again, not the cleanest, but it's very nice to see. We traded up, filled this fair value gap, bearish order block, down close. Remember, we're expecting an up close week. We're looking for some kind of downwards price action. Now, this bullish order block is still technically valid because price hasn't traded to the 50% level of it, and it's respected it so far. So we should take that into account moving into the new week. We should assume it's a bullish order block because that's what it is. As soon as it gets violated, then and only then do we look at the next PD array, which would then be the fair value gap in these lows. However, until then, I'm looking at the 50% level of the order block, which is what we call mean threshold, to see if it can provide support for price. And if it does, great, because we can get in on a nice swing. But if not, then obviously, like I said, we'll look for the next PD array, which we've already delineated below here. Also, there's a fair value gap within a fair value gap. What does that do? Increase probability. And like I said, price is always either going for liquidity or an imbalance. And here's a daily imbalance. Now, like I said, it's possible we may just respect this bullish order block and turn within it, which would be great. And then you're probably thinking, well, there's no swing lows below here other than this. And there's no imbalance. Well, as we drop down to the low time frames, that's when I start looking around this to see if there's anything that price may want to draw to that it could potentially use, if that makes sense. Very confusing, but let's go to the 4 hour. Clear displacement. Look how price is just messing about on top of the bullish order block. And then, voila, we have a imbalance right there. So let's get that drawn out. We'll make it orange. Also lined up with, coupled with a bullish order block. And it'll be nice to see if price can trade down into that early in the week, in line with pound trading down into its discount, in line with dollar trading up into its premium. So let's go to the 1 hour. Again, very ugly price action, but generally speaking, I'd like to think that we can just get down there. And like, because of how close this target is, relative equal lows again, 1, 2. Because of how close this target is in general, like, you know, this could do that in probably two hours or something. But my point is, this is what tends to throw me off, because when it's close like this, I'm like, wow, should we be looking at this? Because it'll probably get to here so fast that we might as well start thinking about the next PD array. And that's where it gets difficult, because it's like, wow, sometimes you'll find that one pair is consolidating a lot, or is just simply more stronger than, say, pound, which we might find is falling aggressively, right? And times like that, when the reversal of the week does come, which we're anticipating, why? Because eventually we want to trade higher, probably on the Thursday after CPI. When one's consolidating and showing strength, and we're at the beginning of the week creating the manipulation, which is weakness, when it does come to trading that on the long side, you obviously switch to this pair, or to the, you know, the stronger pair, and then you'll see it put in all the work. All that resistance it was showing, we're getting into that discount, it will be put into the buy side, and you'll see price move. So yeah, very interesting. Again, these relative equal lows, too smooth, price will likely want to go grab them pretty quickly, and it's just a matter of seeing where dollar's at once we are below these lows, and how price is acting in general. So that's going to be everything, guys. I hope that all makes sense. Thank you so much for watching. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, join the Discord. And yeah, I'll catch you guys tomorrow. Peace.